A very good morning to all my lovely students and a very happy Guru Nanak Jayanti to each one of us. And on this note, we are going to start up our session today. So it's a holiday for all of us today, right? So I think all of you can actually study after my session, complete whatever is being taught. So I can see students already joining in. So very good morning to all of you. Okay, Shreya has a question. Good morning, ma'am. Could you please let me in practical question number 2, why absorption of work overheads is transferred to costing P&L account? Okay, and not to WIP account. Okay, Shreya, I will just look into the question. Each one of you, Riddhi, Pratiksha, Saida, Riya, Harish, everybody, a very happy good morning. So let me first take up the doubt of Shreya, right? So it is a practical question which she is asking. So let me see. Practical question. Just a second, Shreya. Let me have a look at your question and then I'll be able to answer better. Okay. As such, I will be looking at all the queries at the end of the session because first I will concentrate on doing certain sums, explaining you reconciliation, and then we can actually go ahead with your doubts. So this is practical question 2. This is what I hope you are asking me, Shreya. Okay, so there is a question wherein works overhead actual 160 excluding items shown above, absorbed in building construction is 20, under absorbed is 8. Okay, so now at the end of the month, the stock of raw material, okay, prepare the relevant control accounts to record the above transactions. So before we go ahead, let us look into what the sum is about. It follows historic job accounting system, which is not integrated with financial accounts. That means it is non-integrated. At the beginning of the month, they have given us the opening balances. So we have old ledger, WIP, and finished good account, building construction account. Okay. So there is a WIP account which is separate, and there's a building construction account which is separate. So you just want to know about works overhead. So works overhead is 160. So the entry for works overhead would be works overhead control account debit to CLC 160. Then out of that 160, 20 is going to building construction. So it will be building construction account debit to works overhead. Yes. And the balance, if you actually look at it, you can't see an overhead balance. Can you, Shreya? Can you see that? Is there any kind of opening balance as far as the overheads is concerned? We only have an opening balance for raw material, which is quite possible because raw material which is not used or which is not put into production, you will have a closing balance. WIP, of course, which is not completed, will definitely have a closing balance, and finished good, which is not actually sold, will have a closing balance. In my last lecture, I told you that wherein we actually had expenses, that is factory overhead or administration overhead or selling distribution overheads, they had a opening balance, right? Now, in this question, if you actually see, I'm not seeing what ICAI has done. I'm just answering your question. Now, there is no opening balance of the overhead account. And if you actually look at it, admin overhead, they have just given us, works overhead they have given us incurred is 160. And from this 160, 20 goes into the construction account. And then they have just told me that there is an under absorption, if I'm not right. There's an under absorption of 8. Now, what does the word under absorption means? That means that technically speaking, out of 160, if 20 goes here, 140 is left. And this whole 120 should be actually transferred to WIP control account to works over it. And if whole 140 doesn't go, then what should be done? WIP control account debit. And if 8 is under absorbed, Shreya, then in that situation, works overhead control account, only 132 is transferred. And 8 would remain as balance, yes or no? That is why when we did the account last time, there was a balance which was being left. But when were we leaving the balance? Because there was an opening balance. So if there was any kind of situation of under and over absorption, there was a balance existing in our expenses account. Now I would like to take you back to your overheads. You people have already studied your overheads. Now, if you remember your overheads, there was a topic which was taught to you, which was reasons for under or over absorption, and they were normal, abnormal. Remember that? That is, after the overheads were not fully absorbed, we used to find out what was the reason for overheads being under absorbed, right? And after finding out the reasons, if it was normal, we used to find out a supplementary rate, remember? And if it was abnormal, we were transferring it to costing period. Now, Shreya, in this particular question, if you'll actually look into works overhead is 140, and if it is absorbed only 132, then $8, which is $8, 8 lakhs or whatever that figure is, if it is under absorbed, then I should find out the reasons. That what is the reason for the overhead not being absorbed? Is it normal? If it was normal, then we calculate the supplementary rate and we transfer, and we used to accordingly pass an entry. If you remember, whatever goods were sold, we were putting it into cost of sales. Whatever goods were into inventory, we were debiting the stock account. And whatever was still in process, we used to transfer it to WIP. This is what we used to do when we were doing overheads and supplementary rate. And if anything was abnormal, we were just putting it to costing P&L account debit to overhead control account. Now, here in the question, they have not given me anything. They have not given me any reason. Right? They have not given me any reason for under and over absorption. But there is no balance as far as expense accounts are concerned. That means any kind of under and over absorption needs to be treated as abnormal and put it into costing P&L. So this is the logic why when there is an under absorption, institute would have put it into costing P&L account. Okay. Now we can actually go and look into the answer. Yeah, Shreya, sorry. So where is the answer? Is this the answer? Is this the answer? Okay. Yeah. So look at your, this is which question? It was practical question 2, right? Yes. So the answers begin so these are working notes. Question number 2. store ledger, wages, overhead control account. This is the question, right? So look at it. Overhead. I have not looked into the whole question. So I've just looked at three figures. That is incurred 160. What is being transferred to building construction account, right? There must be other figures also there. That is why there is a balance from store ledger and wages control account. Since there is no opening balance, whatever is coming out to be under absorption, which they have already given us, will go down to your costing P&L account. And the reason why it will go down to costing P&L account, I have explained to you. So Shreya. So I hope, Shreya, you have understood your doubt. Okay. A very good morning to all of you. Shubham, why taxation class is not available? I have no idea, Shubham. Hello, guys. A very, very, very good morning. Pooja, everybody. I have no idea, Shubham. Please do not ask me this question again, that why taxation class is not available. Riya, ma'am, we will do illustrations of the module itself. You will please talk the concept and then take the questions uploaded by you. Riya, I'll first like to take up the questions of ICAI module, and if at all we have time, we'll definitely. Thank you, Pooja. Right? Tandon, yes. Today we'll be solving more and more of such. Right now, then I was looking into the doubt of Pooja. Okay. So guys, we had the first, now we are actually starting up with the session. So it's just till now solving the doubt of Shreya. Shreya, you need to tell me that you have understood. Today we'll be solving sums. First half of the session, that is before we go for the break, we'll be solving the questions of ICAI material, and thereafter we'll be going down for reconciliation of cost and financial accounts. So that's how our study pattern will be. So we studied about non-integrated. We tried to solve one sum of non-integrated. I had already explained you that what is going to be the difference of this integrated accounting. So today we will just be doing the sum, right? So this is integral accounting. We will be looking into the sum. The only difference between integrated and non-integrated is that in non-integrated, anything wherein I could use the word debtor, creditor, cash, bank, purchase, expense, I was not using any of those terms. I was just putting it to cost and ledger control account. The sequence was very clear. First of all, it is very easy to do integrated accounting. The reason is the entries are handful, right? Because we are only recording entries which we need to do for the purpose of making a cost sheet. So for the purpose of making a cost sheet, guys, the entries will be limited. We'll be talking about material, we'll be talking about wages, we'll be talking about factory overhead, admin overhead, selling overhead, sales. That's it. So the number of entries is very, very less. Material, as I told you, what can happen? I can buy the material, I can return the material, I can issue the material to the production. From the production department, if the material is unused, it can come back to the stores. So that's all what can happen if it is material. So the maximum accounting entries can be, if you issue raw material, you buy raw material, it is going to be material control account debit or store ledger control account debit to CLC if it is non-integrated. And if it is integrated, then it could be cash or creditor, depending on I bought it for cash or I bought it for credit. Similarly, if the material is being issued to production, now here whether it is integrated or non-integrated. Since it is issued, this is an internal entry that is issuing the material from the store ledger to the production. Entry would be WIP control account, debit to store ledger control. That means accounting is similar, whether it is integrated or non-integrated. Only difference arises between the two is when I'm buying a material or I'm paying the wages or I'm incurring expenses, right? Or I'm returning the goods to the supplier. That's the only time when there is a difference in accounting entries of integrated and non-integrated account. So that's a summary of whatever we have studied. So look at it, journalize the following transaction, assuming, okay, raw material purchased, direct material issued to production. So can we just start doing the entries? So raw material purchased, what will be the entry? Okay, now I do not know whether they are for debit or credit. I'll just try to make the entries here. All of you can do it with me. So raw material purchase. So can I pass the entry? Store ledger control account, debit, cash, or credit? Yes, sir. Material issued to production. Entry would be the same, right? It will be WIP control account, debit, to store ledger control account. Yes, wages paid, 30% are indirect. So out of 120, 30% are indirect. Yes. First of all, wages control account, debit, to cash or creditor for expenses. Yes. To creditors for expenses. And after here, you have to pass the entry. So here there is a difference. If it was integrated, non-integrated, instead of to cash or credit, I would have passed the entry to sales. But after that, the entries are going to be same. Indirect entry will go in factory overhead control account, debit, to wages control account. And the direct wages will go into WIP control account to your wages control. Manufacturing expenses incurred, entry would be manufacturing overhead control account, debit to cash or to credit. Then how much is being charged to production, WIP control account, debit to your manufacturing overhead account. Look at it, incurred is 84, absorption is 92. That means it is a situation of over absorption. We may do the over and under absorption, close it. If there is no opening balance, you can debit or credit directly to costing P&L account, as I told you. Same goes in for selling and distribution expenses. So I hope everybody's clear. There is no difference between integrated and non-integrated as far as the internal entries are concerned. Difference arises only when there is a finance item. So look at it, store ledger control account to creditors or to the bank, right? Amount issued to production, WIP control account to store ledger control account. So can you just look at, there is no difference in internal entries, right? Wages paid, wages control account to bank. How much? 20%, 30% was indirect, so it was going to factory overhead. The amount which was direct is going down to WIP control account. Factory overhead incurred, there's a difference. Factory overhead control account to bank or to credit. Amount this much. How much is being charged to the production? 92. So WIP control account to factory overhead control account. Selling and distribution, when you incur selling and distribution overhead to bank, then how much? So here there's a difference. If it was non-integrated, we would have been using the word CLC. Then how much goods are being produced? Finished good control account to WIP. There's no difference between non-integrated or integrated. Goods which we are selling, cost of sales to finished good control account. I hope everybody sells instead of booking through CLC. Look at it. When you pay the debtors or you make a sale, so it either be receivables or bank to sales. You pay to the debtors, bank to receivables. Now, this kind of entry will not be there as far as a non-integrated account is concerned, because they are not bothered whether you pay the debtors or you don't pay the debtors. Similarly, you receive from the debtors or you don't receive from the debtors. Similarly, you pay the creditors or you don't pay the creditors, they are not bothered. Right? So I hope everybody is clear that integrated, non-integrated there is not much of a difference, right? The concept of why the under and over absorption is transferred to cost income account, I just explained because Shreya asked me a doubt. Okay. So, Parth, ma'am, what is the meaning of balance of cost ledger control account? The meaning of balance of cost ledger control account is it is the total of all the balances which are existing part in a finished good control account, in a store ledger control account, in a WIP account. And if the expenses control account is not closed, then even the balance is there. So any kind of debit balances which are there, we have an opposite balance in the form of credit ledger control account. So for example, if I have a balance in store, imagine part I have under an over absorption of overheads, I am transferring it to cost income. That means if we'll talk about balances, we'll have only balances in SLC account and WIP account and finished good account. And there will always be debit balances, correct? There will always be debit balances because material left with me, finished good not sold, WIP not complete. So the total of those debit balances will have a equal amount of credit balance in a CLC account. So basically a CLC account is what you can say, क्या बोलते हैं, मतलब आपके लिए एक opposite account है wherein instead of using the cash or bank or debtor or creditor, we are using one account wherein when I buy raw material, debit goes into the material control account and the credit goes into the CLC account. So basically, it's a summary of all my account, all my expenses which I have done or incurred. So the debit balance of the same will have an equal and opposite credit balance. So I think Part, I have answered your question. Good morning, Dari, Tulsi, Millie, Vanchup, everybody. If I've missed anybody's name, I'll be sorry for the same because the screen keeps on changing. Shreya, you have understood. Oh, it makes me feel happy. Sunil, my voice is lagging. Is my voice lagging? I don't know. Okay. Ma'am, there is an issue to open this lecture. It is only buffering. Okay, Pooja, I have no idea. Is it buffering? Is it buffering because Pooja is writing this? I don't know how many times she has written this. Ma'am, there is an issue to open this lecture. It is only buffering. I don't know. Okay. I have no idea, Pooja, because everybody else is actually, you can see they're asking me questions. So I don't think there is a buffer. Rest, please, anybody else, tell me please if there is a buffering happening. Millie, my voice is not clear. Okay, so, okay, so you've understood it completely. Wonderful. Yes, Ria, you can say it's an adjustment account. As I said, it's a summary of this account. Okay, so lecture is fine. Thank you so much. Okay, thank you, Harish. So video is good. Thank you. So let us look at this illustration now, illustration 4. So guys, if I now put up something for you, you should be very clear. If first thing, if you find opening balance in factory overhead or administration overhead or selling and distribution overhead control accounts, then please remember, this is I'm telling you, and please remember, please leave the under and over absorption as balance. Is that very clear? If you find opening balance given in the question in any of these expense accounts, whether it is a factory overhead or an admin overhead or a selling and distribution overhead control account, you find an opening balance, then you should understand that the company is not finding out the reason for the under and over absorption, right? Because the company is just closing account and leaving it to the leaving the balance, right? Then in that situation, when details are given to you and there is an under and over absorption, please you also leave, do not transfer it to the costing account. But if you do not find, like in the question, but if you do not find any opening balances in the expenses account, and no further detail is given to you by ICAI. No further detail is given. Now, when I say further detail means that we try to find out that how much is due to normal reasons and how much is due to abnormal reasons. No such details are given. Then please transfer under and over absorption to costing P&L account. I hope I'm very clear. This is the crux. This is the crux. Okay. So with this, now I go back to the question. So look at it. In the absence of chief accountant, you have been asked to prepare a month's cost accounts for the company, which operates a batch costing system fully integrated with financial accounts. The following relevant information is provided to you. So there's a stored ledger control account, WIP control account, finished good control account. Some transactions have been given to us and we are supposed to prepare the following accounts, right? Now, guys, it'll be very difficult for me to solve it here. So I will be solving it on the whiteboard. Everybody open up illustration 4 on a different device. If you're using the laptop, open it up on the mobile. If you're using a mobile, open it up on some other device or some other mobile. So I'm giving you 30 seconds till the time you open up this question on a separate device and we start solving this particular question. Okay? So even I open it up in a different device. Okay, so I have opened it up on my mobile and we shall be solving illustration 4. Illustration 4. Just a second, let me open it up. Okay, illustration 4. Right? Okay. Okay. Oh God, ma'am, your voice is not clear. Somebody is saying there is buffering. Ma'am, your voice is echoing. Okay. I don't know. Ma'am, I have a doubt in illustration number 3. Now let me solve illustration 4 and then we'll go back. Pujita, right? Shri Pujita, right? Ma'am, why is the unproductive direct wages charged to factory overhead? Okay, Pujita, if there is an indirect wages, unproductive wages means what? They are not being used directly into production. That means they may be, you pay wages to the people who do repair work or to the people who do unloading work. Or to the, there are so many things which are happening inside the factory, right? So technically speaking, any kind of indirect wages, if you pay, it's an overhead. So you can't put it directly into WIP control account. Puja, you'll have to put it as factory overhead control account. You'll have to transfer those indirect wages into the factory overhead. And from there only, we can absorb it on WIP because overheads are always absorbed, right? So I directly cannot transfer every expenditure to the overhead account. So I hope, Pujita, I've answered your question. Ma'am, Parth, I hope this is the inbuilt. I don't know what you're trying to tell me. I am not aware of that particular, what you can say. I've not used it, Parth, right? So maybe in the next class, I'll look into it and maybe I'll use it, right? So let's go down to the sum. Okay, so everybody has opened the material. What is this part? I become inquisitive. Instead of using an app like Microsoft OneNote and share the screen, it will be more helpful. Why do you say so, Pat? Because this whiteboard is an inbuilt feature in the Zoom thing. So when I'm solving the sum, I'll be using only this thing. So for what do you want me to open that Microsoft OneNote? Right? I really don't know. Okay. Now, if you're wanting me to work on the Word file or an Excel file and then do it, if that is what you're wanting, I'm more comfortable on the whiteboard. Okay, Pat? Now, so let me start doing the sum. So I have a store ledger. Control account. I have a store ledger control account. The opening balance is 25,000. This is the balance. Then I have got WIP control account. Balance is 20,000. I've got finished good control account. Balance 35,000. Now look at it. Prepaid overhead brought forward from the previous month, right? So we have got a production overhead control account, and the amount is 3,000, right? Now it is prepaid. Now what do you mean by prepaid overhead? Prepaid overhead brought forward from previous month. That means it was incurred last year, so the expenses was expense debit to cash, and then some amount was transferred to prepaid overhead account, right? So it was prepaid overhead account to the production overhead account, right? And now this year, from that prepaid account, I'm transferring it to production overhead control account again. So there's a prepaid overhead. It is not a balance, it is a prepaid. From the prepaid account, I am transferring it to the production overhead account. Transactions during the month. I don't have to make a CLC account because this is a integrated account. Right? So that is why you did not find the balance of CLC account. Materials purchased. Now I do not know materials are purchased in cash or in credit. I have lesser place. I'll just write down cash or credit. How much is the amount? 75,000. Then they have given material issued to production. So material which has been issued to production will go into WIP account, which is how much? 30,000. So from SLC, we have got 30,000 coming. Then they have said material issued to factory maintenance is 4,000. So to production overhead account, 4,000. So we have it from the SLC, 4,000. Yes. Okay, then further information, material transferred between batches. Okay, so there is from one department to another department, this amount has been transferred, 5,000. Now, what do we do? This is transferred from one batch to another batch, right? So this is not from the material control account to a WIP account. This would be from job 1 to job 2, right? This should be the situation. So how do I pass the entry? Because it is not from the store ledger to WIP. It would be from batch 1 to batch 2, right? So I'm not passing this entry because this is between two batches, okay? Then we have wage control account. To cash or credit, I do not know. I'm just putting in cash. So total wages paid. So I'm assuming, it is in cash, 30,000. In this, they are telling us that direct workers is 25,000 and indirect workers is 5,000. So that means the direct wages will go into WIP account and indirect will go into production overhead control account, 5,000. Wages control account. Always see the first account which gets closed is always the wages control account. Yes? Okay. Okay. Now coming up to this. Okay, thank you, but I'm done, right? I'm happier with this whiteboard. Next time, I will definitely open up the Word file and try to do it. Okay. Now coming up here, Ria, SLC balance is 66,000. Store ledger control account balance. I can see store ledger control balance as 25. From where did you get 66,000? I don't know. Okay, you must have solved this. Now, direct wages charged to batches, 20,000. Recorded unproductive time of direct workers. Now, look at it. That means from this wages, I transferred 25,000 to WIP account. Sorry, I forgot to transfer it here. Wages, 25,000. Yes or no? Now, this is a very big question. From the 25,000 direct wages, they say 20,000 is actually the people are working, they are being charged to batches, but a recorded unproductive time of direct workers is 5,000, right? Now, if you again go back to your overheads, there it was actually taught, and even at employee, I think employees, I only have taught this particular batch, that is your batch. If you remember that if the idle time is acceptable, then that idle time will go directly into the costing. That means I can put it into costing. But if that idle time could have been avoided, if it was not supposed to be incurred, if it was unacceptable, then it's treated to be abnormal. And if it is abnormal, I should transfer it to costing account. Right? If you remember your employee account. Now, similarly, I can see it here that direct wages which are charged to batches is 20,000. That means out of the direct wages of 25,000, which I'm putting into WIP control account, they are very clear that 20,000 only went into batches, 5,000 is recorded non-productive time. Now, I do not know what to do with this non-productive time, right? Nothing is given. That is it acceptable or is it not acceptable? If I say this is not acceptable, then I should transfer this to costing P&L account. Yes or no? I should transfer this to costing P&L account. If it is not acceptable, if it is above the range of my acceptability, so it's not a normal idea, right? Then I should not put it into the WIP account. I should transfer it to costing P&L account, right? I could have done it here only, or from WIP it can transfer. So we will see what ICAI is doing. Next, selling and distribution overheads incurred. So I make selling and distribution overhead control account. So again, I'm assuming to cash How much is it? Okay. 6,000. Right. Then other production overheads incurred. Now, other production overheads incurred. Right. Can I put it into admin overheads or where do I put it? Can I put it into admin overhead? Okay. To cash. Okay. Then they have said sales. Sales is 1 lakh. So I would record the sales account. How will I record? How will I record sales? Debtor account debit to sales. So it will be debtor account or cash account to sales. How much is it? 1 lakh. Okay. Now, cost of finished goods sold. And then there is an information cost of goods completed and transferred into finished goods during the month is 65,000. Okay, that means from WIP, what we transfer to finished good control account is 65,000. This is what it means. Cost of goods completed and transferred to finished good during the month is 65,000. This 6 looks better, right? And the cost of goods sold happens to be, that means from WIP account, I have 65,000 and I transfer to cost of sales account 80,000. Yes? Just keep on seeing, I just keep on passing the entries. Physical value of WIP at the end of the month is 40,000. Now, this is physical value, right? So they have technically given me the closing balance. Production overheads, absorption rate is 150% of the direct wages charged to work in progress. Now, here it's a big question, how much you're charging it to work in progress. So if I'm charging to work in progress 20,000, 5,000 I transfer to cost in account, then production overheads, which will be absorbed in WIP account, is, they are saying, is how much? It is 150%. So if 20,000 is what I have charged to WIP account, right? This is a big question. 150% of direct wages charged to WIP account. Here, direct workers' wages was 25,000, but 5,000 was idle time, right? The 5,000 idle time I transferred to cost of living. So how much is charged to WIP account? 20,000. So 150% of it is going to be how much? 20,000 for 150% is going to be, I think, 30,000. Yes? Now, physical value, can I put here as closing balance as 40,000. So I have put in all the figures. And now let us start tallying it and see that, how much we are able to deal with. Vedant, have I missed out on any adjustment? I think I have taken up in all the adjustments, right? Ria, my voice is echoing. I don't know. Where is the adjustment, Vedant? I can't find it. We will look into the solution. Okay. So let us start tallying. Right. So how much is this balance? This is 1 lakh. 1 lakh minus 34,000. 1 lakh minus 34,000. So now I understand why 66,000 was told by some student. So this is the balance. Okay. Let's go down to the next account, production overhead control account. So 30,000. That means I would have incurred cash would have been 30,000 minus 3,000 minus 4,000 minus 5,000, 18,000. Now, guys, if you remember, there was something which was given other overheads incurred, and there was selling and distribution overheads incurred. Now, I made admin overhead account separately, right? I do not know what that other overhead is. Can I treat this admin overheads instead of calling that to be admin overhead? Can I say that, okay, there were overheads which were incurred were actually 12,000? Yes. Can I treat this to be incurred as 12,000? I'm just assuming because they had not given it was admin overhead. Production overhead, how much was incurred? I did not find in the question. Right. So can I treat this to be the production overheads only? Because there was no information of, it was just other production overheads. Sorry. Okay. So I think the balance here, it was other production overheads. Sorry. I was wrong. I took it as admin overhead. Sorry. Okay. Okay. So now if I try to balance this account, I'll have a balance of 6,000. Can I transfer it to costing P&L account? Because there is no balance given. Yes. Wages account was already closed. Can I make the WIP account? Let us see. So it was 20,000 plus 30,000 plus 25,000, 75,000 here. And here, look at it, 5,000 plus 65,000 plus 40,000, 1,10,000. I think I've forgotten to transfer from production. Sorry. 30,000. Sorry. So 20,000 plus 30,000 plus 25,000 plus 30,000. The balance is 1,05,000. Now physical balance happens to be 40,000, but looking at here, 5,000 plus 65,000 plus 40,000. It is coming out to be 1,10,000. It is coming out to be 1,10,000. Right. So what are we going to do with that 5,000 balance? Right. Sunil, I really can't do anything if my voice is lagging. Right. Jay, we took up at 150%. Right. If my voice is lagging, I really can't help it, Sunil. Kushia, miss, I don't know. If voice is lagging, I really can't help it. Okay. Anyways, so guys, look at it. So let me make it more neater. Right. So we have got a store ledger control account which we completed. We have got a wages control account which we completed. We tried to make production overhead control account. Yes, which was very clear. Now here, what you can say. So I did that, Rohit, 20,000 into 150% happens to be 30,000. So I absorbed overheads 150% of the direct wages which have been charged. Right. My direct wages 25,000 is 5,000 I transferred to costing P&L. Right. So I made this account. I hope I'm clear. Okay. Any kind of error, if it will be there here, let's check it out. 30,000 minus 3,000 minus 4,000 minus 5,000 minus 12,000, 6,000 goes into costing P&L account. Similarly, when I'm making a WIP account, there's a balance of 5,000 coming. That means there's a difference between the physical balance, closing balance, but there's a difference between the accounting balance which is coming. As per accounting balance, it should be 35,000. That means where is the difference of 5,000 coming in? Right. Now, if I close this finished good control account, if I close this finished good control account, it is 1 lakh. So the balance, this is a closing balance of 20,000 in the finished good account. Selling and distribution, I'll transfer to cost of sales account, right? This sales also you will transfer to the costing P&L account, right? 1 lakh. Selling and distribution, you can transfer to costing P&L account. Yes, 6,000. This account gets closed. Now, if I make this finished good account, you transfer it to cost of sales account. $80,000, and from cost of sales account to transfer it to costing P&L account, 80,000. You can miss the step, and then you can directly make the costing P&L account. So if I have to make the costing P&L account, I'm rubbing it here, right? If I have to make a costing P&L account, we have from cost of sales, we have got 80,000. Sales, we have got 1 lakh. Selling and distribution was 6,000. Then that idle time, I transferred it from WIP, it was 5,000. And there's another 5,000 which is not tallying, right? So where do I put the difference? First of all, I need to see that should I take up the physical balance or should I take up the closing balance as far as the accounting is concerned, right? Because they have given physical balance is 40,000 in a WIP. So on this note, I would like to check, I would like to see that what ICAI has done. So we completed the question, right? So let's look into the question. Have we able to reach? So our store ledger control account was fine. It was 66,000. WIP control account, look at it. From WIP wages control account, 25,000. Look at it. In wages control account only, they transferred 20,000 to the WIP account. They transferred this 5,000 production overhead control. Look at it. Right? And this non-productive wages also they have put it into 5,000. Right? Here, what did I say? In employee cost also, if you remember, it was very clear, direct workers, if the idle time is acceptable, it goes into the production. The idle time is not acceptable, it goes into costing P&L account, or we treat it as overheads. Right? So what has ICAI done? They have just done that. I transferred this whole 25,000 to WIP account. From WIP account, I transferred 5,000 to the costing P&L account. But what is the right pattern which ICAI is following? They said this idle time, I'll put it, it's an overhead. I am assuming it to be non-acceptable. So they transferred it to production overhead control. Now, if you will make the production overhead control account, remember our balance was coming out to be how much? Our balance was coming out to be 6,000. Why? Because we had transferred 5,000 directly to costing P&L account. Right? Look at here. Here, their over absorption is coming out to be only 1,000 because they transferred from the wages control account this 5,000 of idle time, they transferred it here. Am I very sound and clear? Other answers would have also tallied. Why? Because what we were doing, if we go back to what we had done, we transferred from the wages control account 5,000, 25,000 to wages account. Then from WIP account, I transferred 5,000 directly to the costing P&L account. So I transferred 5,000 came from here. Then production overhead control account was also showing costing P&L account 6,000 here. So can you understand this 6,000 would have come here? Yes. So automatically under absorption, over absorption of only 1,000 that have been left. Costing P&L account, 5,000 from WIP, 6,000 from here. So end of the day, End result is 1,000. Institute would have marked you, they would have given you marks, right? But this is the time to apply what we have studied in our employee costing. Employee costing, they had very clearly said, if idle time is within acceptable limit, you can put it as a part of production. So if it is a part of production, that means it will be WI. The question was not clear. It was just written, a recorded unproductive idle time of the workers. So we treated it as unacceptable. It was unacceptable. They transferred from the wages, instead of transferring it to WIP, they transferred it to production overhead control. Yes? I hope I'm sorted. Okay. Now coming up to the next thing. So one thing we are clear about this idle time. Now coming up to the next thing. WIP control account. We transferred this 40,000 as a physical value. If we take up the physical value as a closing balance, there was a difference of 5,000 coming up, right? Now the difference of 5,000, they have put in where? They have treated it as a stock gain, right? Right? Because as per accounting, the closing balance should have been only 35,000, right? But our balance was coming out to be 40,000 in physical. So there was a difference of 5,000. Yes? Remember? We did the sum. Right? So there it was not tallying. Yes? So what did we do? This balance which will come here will go down to our costing profit and loss account. I hope I'm very clear. Okay. So they put it into costing P&L account. Now look at costing P&L account. From finished good, we have 8,000. From selling and distribution, 6,000. Sales was 1 lakh. Production overhead, we had 1,000 coming up. WIP account, a stock gain of 5,000. So this balance is the profit here of 20,000. So Institute has very clearly given certain notes. Materials transferred from one batch to another batch will not affect, because that is a transfer between one job to another job. Non-production is a production overhead, so it is transferred to product, not transferred to WIP control account. Am I very sound and clear? Okay. So now let me look at the doubts. Vivek, ma'am, wages non-productive time is 5,000 transferred to production overhead control account. But non-productive wages are always an overhead. You're saying it, no? Non-productive time, you're talking about the idle time, no? So idle time, please go down to your employee costing. If you go down to employee costing, there are a table made of idle time, and I only taught you employee costing. And if you remember there, Vivek, it was very clear that any kind of idle time which is acceptable is a part of production cost. Any idle time above the our acceptance level will be treated as an overhead and charged to costing P&L account. So ICAI was very clear. It will be treated as overhead and charged to costing P&L account. Right? So technically, what should we do? What I did was I charged it directly to WIP control account, and then I realized, okay, this is idle time, so I transferred it to costing P&L account directly. Right? But what is the right pattern of doing it, Vivek? See, I have been doing this I don't know from how many times, but why I did this? Because that's a normal thing which a student does. Right? So the right pattern is, if there's an unacceptable idle time, or the question is not clear that the idle time is acceptable or non-acceptable, idle time will always be treated as production overheads. You transfer it to production overheads. And then production overheads, so you always absorb. So you always absorb overheads into WI. I hope you are getting it very clearly. Right? You don't transfer directly the balance of a production overhead or any overhead control account. You don't transfer directly to the account where you need to go. If it is an admin overhead, you absorb it on the finished good. Selling and distribution, you directly transfer it to costing. Right? So this is integrated accounting and non-integrated accounting is whatever you have studied till now. Your cost sheet. If you understand cost sheet, you understand why it is being transferred from here to there. And individually while you were studying, then also it was tough. Okay, so I think why there's a difference, Pooja, of 5,000 in WIP account? You know, yourself think that accounting, as per accounting, the balance should have been only 35,000. But if there is a higher balance left with me, that means there is some kind of gain which has happened, no? Right? So that is why they are saying it's a stock gain. Basically, I've got more stock left, right? Okay, so I think, okay, everybody has understood. Thank you so much, Pooja. Ma'am, yes, ma'am, I do like you in the exam. Then ICAI give marks. Pooja, look at it. I corrected myself. Institute will give a benefit of doubt, right? That okay, student understands that this idle time is unproductive and it should go into costing P&L account. But it ICAI depends upon who, what is the solution which head examiner gives it. Because technically, the idle time should be treated as overhead. Is very clearly given in the employee costing chapter. So any kind of idle time which is above the acceptable limit should go into overheads. And from overheads, we always absorb overheads to WIP account. I hope I am very sound. So directly putting it into costing P&L account, I don't know. ICAI is giving, because we understand that you understand, but you should understand there is a sequence, right? The sequence follows is that if it is an idle time, which is above the acceptable limit, should be treated as overhead. So now please put it in your minds that if it is idle time, nothing is given in the question, transfer the idle time to production overheads. And production overhead, whatever is the absorption rate, accordingly, we transfer it to WIP account. Whatever the balance remains under or over absorption, that goes into costing P&L. So I hope now you're very clear with it. Okay. Now, okay. Yes, idle time is an expense. We are paying for it. Okay. Costing P&L account balance is 25,000. No, whatever you do, Sairam, the balance cannot be different than the balance which is coming here. I'll show it to you. Want to see it? Look at our costing P&L account. Okay, so we transferred cost of sales, say 80,000, right? We transferred from selling and distribution 6,000. Now from WIP, now this gain of 5,000 WIP account to stock gain. Yes, so again WIP 5,000. Yes, and from this production overhead control account over absorption, right? So what is it? Production overhead control account debit to costing P&L account. Yes, so it is how much? 1,000. Yes. Okay. So now let us try to tally the account. Anything else I have left? No. So it is 1 lakh plus 5,000 plus 1,000, 1 lakh 6,000. 1 lakh 6,000 minus 80,000 minus 6,000. Okay, one figure I have put more, right? Oh, I should put here 6,000. Sorry, 6,000. Right. So the profit or the balance will come out here to be 20,000. The balance cannot be 25,000. Okay. I hope I am clear. I hope I'm clear, everybody. Right. Okay, now guys, illustration 5, right? Look at it. 5 destroyed some accounting records of a company. You have been able to collect the following from the spoiled papers as a result. So there is a material control account, 32,000. There is a WIP account, some information, payable, manufacturing. They have given us some additional information, and we are supposed to complete the above accounts in the cost ledger of the company. So should we try doing it? Yes? Okay. So again, guys, in the next class part, I will definitely try doing that, right? Or should I try doing it in this class only? Okay, let me not try it. But since the time you have told me, I really want to try it part. Okay. Now, okay, Ria, you want me to tell you illustration 3. Okay. Just a second, guys. Let me put in some doubt of illustration 3. And then we move up to illustration 5. Ria is asking me again and again. Illustration 3. Okay, what is your doubt in illustration 3, Ria? Ma'am, in illustration 3, if closing stock is given, what will be the entry? It's nil, but it's nil. But what will be the entry? Where is the closing stock? Bit a closing stock of finished good. What will be the entry? What is the entry of a closing stock? If you make a finished good account, right? You have opening balance coming in, right? You have the new products which have been transferred from WIP coming in. So you've got finished good to WIP control account. Whatever you transfer to cost of sales, the goods for selling, the entry is cost of sales to finished good account. Then whatever balance remains is the closing stock. Yes. So closing stock balance at the end of the year, you just put it as finished good account balance to how do we do? It's an opening and closing entry. Ria, you have read what do you do as an opening entry? Balance sheet में opening closing entries आती तो क्या होता है? So it's like all the assets have an opening balance, so it is assets account debit or liabilities credit. Similarly, this finished good account will have an opening balance, so it will be finished good account debit, and there would be something which will be credit, right? The liabilities. It is an opening entry. It will be an opening entry for the next year. So we just put it as a balance. So what are you trying to ask me? I didn't understand. That was your doubt. Okay. Now, can I go back to illustration 5, Ria? Okay, if your doubt is clear, please. Right. Okay, so illustration 5. After that, we'll quickly take up a break and then go down to our, okay, this was the question, right? So we do illustration 5. Okay. So let's look at the question. Now, okay. So the incomplete ledger accounts is, we've got a material control account. So, $32,000 balance they have given. They have given me a WIP control account, and in which they are giving me two things. They are giving me a balance of 9,200. Yes, opening balance, and they have said that the amount which they have transferred to finished good is 1,51,000. So if I try to make a finished good account, there will be from WIP 1,51,000 coming in. Okay, because it will be finished with control account to WIP. Then we have got a creditors account. Okay, we have a creditor account which has an opening balance of 16,400 balance. And they have given me a closing balance as well. 19,200. This is more like checking on your single entry. You have got a manufacturing overhead control account. How much is it? They have just said bank. 29,600. Okay, so there is a finished good account also they have made. So finished good account, I have an opening balance 24,000. Right? I have a closing balance of 30,000. Yes. So this is all the information which is there. Then they have given me some additional information. Right. You have given a valid suggestion part. I feel like trying it. Okay. Now coming up. Additional information is bank book showed that 89,200 has been paid to creditors for raw material. Okay. So if you have paid 89,200 to creditors for raw material, what will be the entry? Creditors account debit to cash. Yes. Entry should have been creditor account debit to cash 89,200. Now guys, please remember, if there is no discount, anything, that means I have bought raw material of 89,200, yes or no? But let me check into if there is any other thing given. Anything about discount or anything, nothing is given. I can't see. They've just given me ending inventory in WIP. Ending inventory of WIP includes material of 5,000 on which 300 direct labor hours have been booked against wages and overheads. This is what is given. The job card shows that 89,200 worth of raw material. Is this the right thing? No. I need to balance it. After balancing, I come to know that how much raw material I must have purchased. Yes or no? I can't put this figure. Simple accounts. So can I tally this account? So it is 89,200. From there, you subtract 16,400, 92,000. Yes, that means I should put creditor account 92,000. Normal creditor account, opening balance, purchases when you do, so it is purchases to creditors. So similarly, I've done that. Okay, so 92,000 of purchases. So one account gets, I could get that figure. Okay, then the second information they have said ending inventory of WIP. So they are telling me that there is a closing balance of how much? Okay, they are telling me there's a closing balance. Ending inventory of WIP is materials of 5,000, right? So we have material of 5,000 on which 300 direct labors have been booked. So labor on this has been booked for 300 and labors are being paid at the rate of 10 per hour. So 300 into 10, 3,000. Yes. And overhead would also be charged. So on the basis of direct labor hours, if 300 hours are there, that means 300 into 4, 1,200 of overhead should have been there. That means the closing balance of my WIP account should have been 9,200. Yes or no? Ending inventory of WIP includes material of 5,000. on which 300 of direct labor hours are worked. That means 300 hours. Each labor is being paid at the rate of 10 rupees per hour. So 300 into 10, 3,000. Overhead rate is 4 per hour. So I did this. Okay. I have no other information besides that. Then the job card shows, okay, that means work wages control account if I had to make, it will be like wages are being paid at the rate of 7,000. So from wages control account, 7,000 should be coming in. Card shows that workers have worked for 7,000 hours, so it's 70,000. 7,000 and the rate is 7,000 into 10. Okay, I hope you're clear. The job card is showing that you have worked for 7,000 hours. Each worker is being paid at the rate of 10. So if I would have made a wage control account here, it would have been how much? To cash 70,000. No direct, indirect, they have told me. So I would have transferred it to WIP account. I hope I'm clear. Okay. I'm rubbing this account because, you know, okay. Now, coming back to this, nothing else. No. Now, production overhead control account, right? So production overhead control account, how much is absorbed in WIP? If I worked for 7,000 hours, then at the rate of 4, it would have been absorbed. It is how much? 7,000 into 4, 28,000 should have been absorbed. That means from manufacturing overheads, I should have got out with 28,000. Yes, I can close this and under an over absorption, I can put it into costing P&L account. Yes, whatever, 1,600. Okay, finished good account, I can tally and I can get out with how much I have transferred to cost of sales. Yes, so let's do that. Anything which you would have missed out, ICAI has given the answer, 24,000 plus 1,51,000 minus 30,000. So that means cost of sales, 1,45,000 we should have transferred. Yes. Material account, I don't have any closing balance, right? Or do I have any closing balance? Anything is given. Anything is given. I just have the opening balance. I know how much is being purchased, right? Can you tell me that how much will be the balance, or which account can I use in to understand that how much has been transferred? So I know in the WIP account, I know the finished good balance. Just a second. Okay, so just a second. If I try to balance this, because I have all the figures, I have the opening balance, I have the wages, I have the overheads, I have how much I have transferred to finished good, how much is the closing balance. That means the balance, if I get here, should be the transfer from SLC. So let us check it out. It is 1,51,000 plus 9,200. 1,60,200 minus 9,200 minus 70,000 minus 28,000. I get out with a balance of 53,000. Yes, that means this is the amount I have transferred to WIP. 53,000. Now I can close this account and get out with the closing balance here. Yes, you can do that. 32,000 plus 92,000, 1,24,000. From here, you subtract your 53,000, so you will get out with your closing balance of 71,000. Okay, so guys, I hope everybody has understood integrated. You can check your balances. 71 manufacturing overheads, 1,600 finished good payable account. Yes. Okay. Sairam, which adjustment you want me to explain you again? They have said at the end, how much is the inventory left. So inventory is consisting of the closing balance. Instead of giving you the closing balance directly, Sairam, they have told you that the closing inventory of WIP consists of 5,000 of material, plus on that 300 labor hours have been worked. So each labor is being paid at the rate of 10. That means 300 into 10 is 3,000. And for every direct labor hours, 4-hour absorption rate of overheads, 4 into 300, 12. That means what should have been the closing balance of WIP? Material plus labor plus overheads. Yes. So this is it. So guys, now I would like to take up a short break of 10 minutes and we shall resume after 10 minutes and we'll do reconciliation. Okay, thank you. Okay. So guys, we are back after a short break, and I can see that we have actually getting comments that you have understood, but there is a question coming up. Darsha, why WP transfer to material account? But WP not transfer to material account. You had everything in the material account, no? We had all the balances. And if you go back to the question, look at it. If you go back to the question, we had the opening balance, we had the figures of how much is purchased, we had how much is the closing balance, but we didn't know how much we have actually transferred to WIP. Sorry, we didn't have the closing balance, neither we had how much we have transferred. But in WIP account, if you go, we had the opening balance, we had the closing balance, we had how much is transferred to finished good, wages, manufacturing. So if you'll actually tally this account, you start with what is coming from the material control account. That's it. Nothing else. Okay, guys, now I think time for us to do some more studies, and that is nothing but reconciliation, right? So, ma'am, is under absorption a loss or a profit? Now, so that you should not say under absorption is a loss or a profit. You should say because of under absorption, what is the impact on the profit and loss account? Under absorption means, if I say there is an under absorption, that means actually, if you have incurred, if you incurred 10,000 rupees, Siddharth, but you have absorbed 8,000. That means in the cost sheet, you have only charged 8,000. That means you have undercharged, right? You have charged lesser to the product, because this 2,000 rupees which you have not charged, it is not going into the cost because you've not charged it, but ultimately this expense account has to close, right? So where will it close? It will go into the costing PL account, yes. And then in the costing PL account, you will debit it ultimately, because if the expenditure is 10,000, I need to debit the 10,000. Am I very clear? But from the 10,000, if actually I could only absorb 8,000, that means the cost of the product is valued at a lower price because the expenditure on it is 10,000, but we could charge only 8,000 to the product. So this is what it means, isn't that? Right? So you should say, ma'am, if it is under absorbed and over absorbed, then you should say if it is under absorbed, what is happening is the profit in costing will be higher. Why it will be higher? Because if you go down to your cost sheet, if you look at your cost sheet, Siddharth, you have got prime cost. In this, you have got factory overhead, not incurred, but absorbed. You have admin overhead, again, not incurred, but absorbed. Selling overheads is actual, right? So I'm just writing out selling and distribution. This is your cost of good, yes or no? So when you subtract from the selling price, what do you get? You get out with the profit. Don't you think because of under and over absorption, this profit gets affected? If you're under absorbing an expenditure, you are showing a higher profit. If you're over absorbing expense, you are showing a lesser profit. I hope I'm very clear with that. If yes, please write it to me and tell me. Okay. Now, coming up to this Vedant's schedule of what? I do not know. Costing lecture after this is on 26th, 29th. There is a lecture. There's a lecture on 1st and 3rd. So Vedant, the schedule of costing is very clear. It is there, right? And don't ask me for any other subject. Right? Okay, so that you've understood makes me feel happy. Now, what do you mean by reconciliation? This is something you should understand and then solve few sums. You have done reconciliation when you did cost and bank. You did cash and bank. There also, when I used to see a CA foundation student, used to find students learning some kind of a table or a formula that you do this, you add it up and reduce it. That's the way, it used to hurt me when I used to see a CA student trying to remember कि कैश से आपको बैंक जाना है तो आप ये ऐड कर लीजिएगा, ये लेस कर लीजिएगा, आपको बैंक से कैश जाना है तो ये कर लीजिएगा. Used to hurt me. Why used to hurt me? Because reconciliation is a general word. Reconciliation की requirement कब होती है? When do you need to reconcile actually? It's a very simple thing. When two things are being done by two different entities, right? Sorry, two is the wrong word. Same thing. I should use the word. When same thing is being done by two different entities, but they're not doing at the same time or in the same manner. Yes or no? Simple. Reconciliation can be between two sister concerns. Now, I am sending goods to another concern, the other concern is receiving it. Now, if I show an entry that I have sent goods, the other concern should make an entry that I have received the goods. But what is happening is because of timing difference or for what? I have made an entry, but the other entity has not made the entry. So what is going to happen at the end of a month or a year? The balance which I may be showing that, okay, this much amount I need to receive from that other entity. Technically speaking, the other entity should also show that they are supposed to pay me that much amount of money. But practically what happens is, if the entries have not been made at the same time by both the entities, or there is a difference in the figures, obviously the balances won't tally. No? I may show that I have to receive 10,000 and the other party may show that they have to pay you only 8,000. So reconciliation is a very general term which needs to be understood, that if there is a same thing which is being done by two different people and if they are not doing in the same manner or in the same time, there can be differences. Like if I talk about costing and finance. Let us first look at the difference. Difference is number one. Certain items not recorded at all in cost. For example, tax paid. Now, did you find any place for tax? You find it, right? But you are making a cost sheet. Did you find that tax paid I have put in? But when you make financial accounts, any tax paid you debit it. So logically speaking, in a financial accounts, if I pay tax, the profits of finance will be lower in finance and in comparison to costing, at least because of tax. Because we are never deducting tax as an expense in costing, but we are deducting it in expense. Or for a matter of fact, let's say interest. Or let's talk about any kind of discounts. No cash discount has been. Let's say bad debt. Have you ever recorded bad debts in costing? No. In finance, if the debts have become bad, it's an expense. Profit and loss to be reduced. So one reason of difference between cost and finance is that there are certain items that are not recorded at all in costing. Right? Now when I say item, I mean both income and expense. For example, transfer fees received. Now transfer fees received, costing doesn't even record it. Costing records only one kind of income, and that is sales. The revenue flow in costing is because of selling of goods. But in finance, we may have dividend received. We may have any investment income. I did a investment in shares or in properties, and I'm getting dividends or I'm getting rental from there. So I will be recording in finance those rental incomes. I'll be recording those dividend incomes. I'll be recording the transfer fees received. So there's so many other modes of income which is happening in finance, which is being recorded in finance. So because of this, the financial profit will be higher in comparison to costing, because costing does not recognize profits. Am I clear? Second big reason for difference is in costing, we absorb expenses. And in finance, we actually what you incur is recorded. So if you have actually incurred wages, or you have incurred office salaries, or if you have incurred rent, which are technically known as administration overhead, in costing, we will absorb those overheads on the basis of a predetermined rate which we have calculated. But in finance, whatever is the actual expenditure, is that what you charge? So, mota, if you can actually see, the costing profit and finance profit, can they ever be same? Can they ever be same? Tell me. Can they ever be same? Dorji, it has been done. Abdul, ma'am, your voice is not audible. Okay. I can't help it. Ma'am, your voice is not clear. It is unclear. It is cracking. Now, what do I do about it? Because that's not in my hand. These others tell me, is the voice clear? Please tell me. Anyways, I have asked you another question. Costing and finance, can they ever be same? Costing and finance profits or loss, can they ever be same? If you've understood, please answer. Right. So till the time you're answering me, the answer is a big no. The profits in costing and the profits which you show in finance, they can never be same. Right? When I say profits, obviously I'm talking about losses. So yes, everybody has answered in a similar manner. Perfect. Perfect. Okay, Riddhi, my voice is not clear. Now, that's not in my hand technically, Riddhi. Why there is a buffering, I have no idea. Is the voice more clear? Is the voice more clear now, Riddhi? Is the voice more clear? If yes, please tell me. Anyways. Okay. Now, so once we understand the logic behind the fact that costing and finance profit are not going to be the same, right? Okay, Anandita says voice is clear. Kushi says it is clear. Somebody says it's not clear. I really can. I don't know. Okay. Okay, it's cracking. I don't know. The net is absolutely perfect, guys. Just seamless. Anyways, let's not get into the technical part. Okay. So, guys, now once we understand that the profit is not the same, now don't you think it is the time that we reconcile? So how do you reconcile? The rule for reconciliation is that if you start say if you start from costing profits, and you want to reach up to finance profit, right? If you want to reach up to finance profit, the rule is I want to reach up to finance profit, right? That means the finance profit should be constant. I should not be thinking to change the finance profit. I'm starting from costing profit. That means any adjustment I will do in the costing profit. Now, when I say adjustment means add or less in order to reach up to the finance profit. It is like this. There are two people. I am there and there's another person. Let's say Riddhi is there. So Riddhi and I am there. Riddhi is at one corner. I am at the other corner. If I want to reach up to Riddhi, Riddhi will remain at the same place. I will walk up to her. Am I very clear? Am I very clear? Right. Imagine these are 2 points. Anu is here. Riddhi is here. Now Anu wants to reach up to Riddhi. Riddhi will not change. Riddhi will stand there only. Yes. Anu will walk up. Right. Anu will try to do what if Riddhi would have done, then what would have happened. Am I very clear? So rule number 1. You start the question from what? You start the question from costing or from finance. Then you will only change that thing. You will not try to change to what you are trying to reach. So if you have started from costing, try to change from costing point of view, because then only you'll reach up to finance. I hope I'm very clear. Don't try to sometimes change costing, sometimes change finance. I started from costing profit. I will always think in this manner that, okay, finance is this. What is the impact of this particular thing? So what do I do so that I reach up to finance? Okay. For example, I tell you admin overhead under absorbed. If I tell you admin overhead under absorbed, now think from this point of view. If administration overhead is under absorbed, that means you have charged lesser expense. Now, guys, if you charge a lesser expense, what happens? If you charge a lesser expense, what happens? Profits will be higher now. If you charge a lesser expense, profits will be higher. Yes, that means under absorption. Where does under absorption happen? In costing. So in costing, if the admin overhead is under absorbed, that means costing profit is higher. So if costing profit is higher, it will try to reach up to finance profit. So what do you need to do? You need to subtract. But if I have said admin overhead over absorbed, that means you've charged higher, you've charged more. So if you charge more, that means expenses that have been charged more, that means the profit should be lesser. That means the profits in costing is lesser. So if cost wants to reach up to finance, they should. Right? So the whole logic of reconciliation is that you need to look into the impact of the respective transaction which will be given. For example, I tell you depreciation in costing is 20,000 and in finance it is 30,000. Now you yourself can see that in depreciation, that in costing you have charged a lesser debt, and in finance you have charged a higher debt. So obviously, because of this difference of 10,000, profits in costing profits kya honge? Will be higher. Yes, sir. Costing profits will be higher. So if costing profit has to go up to finance profit, what do they need to do? They need to subtract this 10,000 rupees. Am I clear? Now let's say it is given overvaluation of closing stock. Now guys, this if question is not clear, this under and overvaluation only happens in costing. All of us know if closing stock is overvalued, that means the profit will be higher. That means technically, if overvaluation of closing stock is there in cost accountancy, that means profits of costing is higher. So if you want to reach up to finance, what do you need to do? Subtract. आपको दूसरे तक पहुंचना है, तो कैसे पहुंचना है? अगर मैंने अपने में ज्यादा किया हुआ, if I've charged higher expense, so my profits are lower. So if my profits are lower in comparison to finance, I will add. If I have charged higher expenses and my profits are low, then if I want to reach up to finance, I will add. So add or less will depend upon what is the impact on the profit, because you're trying to reconcile the profit. If it's a loss, everything will become opposite. For example, if it is admin overhead under-absorbed, if it is under-absorbed and it's a loss situation instead of a profit situation, if it's a loss situation, that means if you charge lesser expenses, the impact on the losses is what? The losses are lower, losses are lesser. Yes, of course, the losses in finance will be higher. So what do you need to do? You need to increase your loss to reach up to finance. Right? It's the same logic. Right? Now, let's say I give you, dividend income receipt. Dividend receipt. Now, logically tell me, dividend is received only in finance. No? That means if dividend income is received, that means finance profit is higher and costing profit is less. Now you are starting from costing. So costing, if it has to reach to finance, what do it needs to do? It needs to add. So am I clear with this thing? Right? Okay, now let me see if you have any doubts. Yes, it's clear. Absolutely correct. Kushi. Mridul, I can't really help about it. It is so lucky, such a great teacher is coming to us. Oh, thank you so much, Vida. Okay. So I hope everybody is clear. Ria, ma'am, these notional expenses we have not seen before in costing P&L account. Notional expenses, where are notional? What do you call as notional here? What do you call as notional, bacha? I didn't get you. There is nothing notional. In costing, we absorb expenses, right, on the basis of a predetermined rate. And in finance, we charge actually what is incurred. So there's a difference. Okay, so I assume if all of us have followed it, time for us to actually do a question. Yeah. So they have first tried to explain you, right? So let's look at it. Illustration 6. Following figures are available from the financial records of ABC Manufacturing Company. Sales, material, wages, admin overhead, WIP. They have all been cost records. Factory overhead is charged at the rate of 100%. Now look at the difference. Look at the difference. You will come to know the difference. Look at it. Factory overheads is 450. Yes. Now these are actual. Look at here. In costing records, factory overhead is charged at 100% of wages. That means in costing, how much we would have charged? If wages are 5 lakh, we would have charged 5 lakh as overheads. This is the way we work in costing. In costing, we develop a methodology, and on that basis, we make our cost. And on that basis, we make our profits. So everybody open up this question, this illustration on a different device, and we will be solving it on the whiteboard. Okay. So let us do it. So let me also open it up. Okay. So we have illustration 6, right? So what do we do? First of all, Let us try to make a finance. Let's try to make a profit and loss account. Right? And let us try to make a cost sheet simultaneously. Okay? And then we will see what is the difference. You can make a cost sheet in the form of an account. You can make a cost sheet in the form of a statement, whatever. So sales. So whether it is profit and loss account or whether it is cost sheet, it will be the same. So sales is how much? 25 lakhs. In our cost sheet, we book sales in the end. So I put in here 25 lakhs. Material, okay. Material is 10 lakh because this is profit and loss account. We work on actual figures. There is wages, 5 lakh. Technically, in the cost sheet, material and wages figure is not absorbed. That's all. That is the way it is. So I can put in here material and wages. Okay. Any direct expense? No, I can't find any direct expense. So my prime cost is 15 lakh. And they have given me some information in WIP. Okay. So WIP, or you can say a closing stock of the material. They have given me WIP, closing WIP. They have given me material 30, labor 20, factory overhead 20. So this is 70,000. Yes. Here in cost sheet, we find it out. Okay. So can I find out my trading profit? Or you can say gross profit. My gross profit will be 25 lakhs 70,000 minus 25 lakhs 70,000 minus 15 lakh. Yes. So this is 10 lakh 70,000. So my gross profit 10 lakh 70,000. Okay. Then they have told me overheads, factory overheads is 4 lakh 50,000. They have told me administration overheads is 2 lakh 60. Now see, I'm making PL accounts. I'm not bothered. It is production related or it is not production related. Then they have got selling and distribution overheads as 1 lakh 80,000. Okay. Then they have told me finished good. There's an inventory of finished good, that is closing stock. I should have put it upper only. It was 1 lakh 50. I did not see it. Can I change it, please? Can I put my closing stock here? 1 lakh 50,000. So then you have got goodwill written off 2 lakhs. And then you have got interest 20,000. I hope I have not missed out on any figure. I'll have to change this, right? And okay, so it is 25 lakhs plus 1,50,000 closing stock, which is given in the question, plus 70,000. So it is 27 lakh 20,000 minus 15 lakh. So it is coming out to be 12 lakh 20,000. Yes. Now, guys, I don't think I missed out on any figure. I've put in all the figures, selling and distribution, factory, everything. Can I find out my profit? So let's do it. Okay. Minus 4,50,000 minus 2,60,000 minus 1,80,000 minus 2 lakhs and minus 20,000. So the profit which I get here is 1,10,000. Now this is the profit as per profit and loss account. If I have done any error, we can check it out, right? This is profit and loss account. No problem here. I just put in the figures. Now let's make up for the cost sheet. I have already put in material and wages, 15 lakh. Now I have got factory overhead. Now I can't put factory overhead directly of 4,50,000. I need to look into the information. The information says in the costing records, factory overhead is charged 100% of wages, right? Administration overhead is 10% of the factory cost, and selling and distribution overheads at the rate of ₹10 per unit sold. This is the way in costing records. So that means that factory overhead, if my wages is 5 lakh, I should have charged 5 lakh as far as factory overhead is concerned, right? Administration overheads, I should be charging how? 10% of factory cost, right? Now, for the purpose of factory cost, this is 20 lakhs. Now, guys, don't you think I need to subtract my closing WIP? Now, how will I calculate my closing WIP? Material is 30,000. Wages is 20,000. Now, I'm not bothered as to what they are giving. I will charge overheads 100% of wages. 100% of wages means 20,000. So technically, my closing WIP is 70,000. I hope I'm clear. Yes, 70,000 should be my closing WIP. By default, it is the same at both places, but it is not essential, right? So I hope I'm very sound and clear that in costing, I'm just following the costing rules. Okay. Now, my my factory cost and factory cost to be 11 lakh 30,000. Is this factory cost done? 19 lakhs, sorry. 90 lakh 30,000. 20 lakhs minus the closing WIP. So I have got 19 lakh 30,000 as my now. They have said administration overheads is 10% of factory cost. So if this is my factory cost, that means my admin overhead should be 10% of this. That means 1,93,000. Yes. So what is my cost? It is 19 lakh 30,000 plus 1,93,000. 21,23,000. Now here I need to subtract my closing finished good. How will I find out my closing finished good? 21,23,000 divided by how many total goods? What are the total goods which are there? Look at it. They have given, I have sold 20,000 units and I have a closing stock. See, look at the question. They have said they have sold 20,000 units and they have a closing stock of 1230 units. That means total goods they must have produced would be 21,230. Yes or no? Yes or no? Sold in the question they have written 20,000. Closing stock is 1230 units. That means 21,230 units they would have produced. If 1230 is my closing balance, or then in that situation, what is the value of your closing stock? Anyways, you can see it is coming out to be 10 rupees per unit. So 21,23,000 divided by 21,230, sorry, 100 rupees per unit. Right? 100 into 1230, 1,23,000. Yes. Now, so what is my cost of goods sold? My cost of goods sold would be 21,23,000 minus 1,23,000. It is 20 lakhs. Now, in this, I'm going to charge my selling and distribution overhead. Selling and distribution overhead is how much units which you have sold. For each unit that you have sold, they are very clear. We are going to charge at what rate? 10 rupees per unit. So 20,000 into 10, 2 lakhs. Yes. So what is my cost of sales? It is 22 lakhs. If my sales is 25 lakhs, what should be my profit? It should be 3 lakhs. Yes. Now, if I tell you each and every step, till material wages, you didn't have a problem. Factory overhead, why did I charge 5 lakh? Because the question says the production overheads are charged 100% of wages. So if it is 100% of direct wages, then wages are 5 lakh, that 100% of it is 5 lakh. Right? Then closing WIP figure, I did not put this 70,000. I calculated WIP. How? Material was given 20, material was given 30, but wages was given 20. Right? And factory overhead I absorb how? 100% of the wages. So wages is 20, so 100% of it, factory overhead will be 20. So value of WIP will be 30 plus 20 plus 20, which is 70. Which is by default coming out to be the same. But it's not essential. Huh? Now I get out with my factory cost, which is how much? This is my factory cost. Yes. 19,30,000. Then the question says I need to charge 10% of factory cost as admin overhead. I should not look into what is my actual. So 10% of factory cost is how much? 1,93,000. With that, I got out with my cost of goods produced. Now, cost of goods produced, the total cost of goods produced is 21,23,000. I divided this by how many units I produced. And I multiplied it with the finished goods left. So I found out the value of closing stock. Now, look at it. I am not even looking at finance. This is the way a costing person does. I got out my cost of goods sold. Then I added up my selling and distribution expenses, found out my cost of sales, subtracted it from sale, and then I got to the profit. Look at it. There's a difference. 1,10,000 is the profit in P&L account, and 3 lakh is the profit as far as cost sheet is concerned. We look into ICAI answer. First, we'll do it like this. Can you look at the differences? One big reason of difference is closing stock is 1,50,000 and here it is 1,23,000. So that means there is undervaluation of closing stock as far as cost sheet is concerned. So if there's undervaluation of closing stock, the profits in costing would be lower in comparison to P&L account. Only one reason, I don't have place. Okay. Okay. If I try to make a reconciliation here, so closing stock 1,50,000 and here it is 1,23,000. Yes. So if I start from costing profit 3 lakhs, this is my costing profit 3 lakhs. One reason of difference I find out is material is same, wages is same, closing WIP is same, closing stock. How much is the difference? 1,50,000 minus 1,23,000, 27,000. And it is undervalued. Undervalued. That means the profits in costing is lesser in comparison to finance. Right? So what do I need to do? I need to add. So I added up this difference. 27,000. Okay. Then I move further. Second difference I see in factory overhead. It is 4,50,000 here and it is 5 lakh here. I have charged more expenses as far as costing is concerned. So the costing profit is lower. By how much? 450 and 5 lakh ka difference is 50,000. Costing profit is low. So if I want to reach up to finance profit, I need to add. I added it 50,000. Okay. Second reason of difference I can see is administration. Administration here is 260 and here it is 190. How much is the difference? 260 minus 1,93,000. 67,000. But if you can look, the what you can say, the expenses are charged more in finance, but this is charged less. So you can say you have undercharged in costing. Because of this expenditure, what has happened is that the profits in costing is higher. Administration overheads, we have charged only 190. Right? So we have under-absorbed admin overhead. Yes or no? So because of this, the costing profits are higher. Finance profits are lower. So if I want to reach up to finance profits, I should subtract this 67,000. Okay. Then the next, goodwill. We don't recognize goodwill. Yes. So because of that, costing profits is higher. So if I want to reach up to finance profits, I should reduce this 20,000. Interest, same thing. Right? Selling and distribution. Selling and distribution was 180 and here it was 2 lakhs. So we have charged higher in costing, so the profits in costing is lesser and finance is more. So I need to add this. Let us see, do we get out with the finance profit? Let us check it out. 3 lakhs plus 27,000 plus 50,000 minus 67,000 minus 20,000 minus 20,000 plus 20,000. It's not that. Where is the difference? Have I done something wrong? Is there anything wrong as far as the calculation goes? Anything wrong? It is not done. Thank you so much, Anandita. Right? Absolutely correct, Pooja. Pita, goodwill is written off, no? So how do you write off a goodwill? P&L account debit to goodwill. Okay, everybody has done it correctly. But I'm not able to reconcile. Look at it. My reconciliation is not tallying. What have I done? I started from costing profit which was 3 lakhs, and I am supposed to reach up to the profit and loss account profit. And my profit and loss account profit is 1,10,000. Look at this added list. I have not been able to reach up to the profits. Right? Can you find out the error which I have done? First of all, we need to check our profits correctly. The goodwill figure is 2 lakhs. Thank you. Okay. So, if I subtract I get out with the profit and loss account profit. Yes. See, all of you are so smart. So, isn't this chapter extremely easy? It's like plate mein marks. Okay, so this is it. They've tried to make the net profit. There is a cost sheet. They've tried to make a reconciliation and they've tried to reach it up. Yes or no? Yes. Illustration 7. They have given us some figures. There is stores. There is WIP. Ascertain the profit as per financial accounts. Right? They've asked me to do that. Okay. They have told me stores ka information they have given. Opening balance is so and so. Purchases is so and so. Transfer from WIP, issue to WIP, issue to repair and maintenance, sold as a special case type cost, shortage in the year, right? So much information they have given, right? Thank you so much, Ria. It makes me feel so happy, right? Okay, now they have given me WIP, and they have just given me entire output is sold as 10% on profit on actual cost from WIP, right? They've given me wages, they have given me overhead expenses. Now, if I have to ascertain the profit and loss as per financial and cost accounts and then reconcile, look at it. Lots of information is given. See, stored ledger account we made. I think now everybody can make it. We had the opening balance. They have made it non-integrated. Purchases to CLC, how much is being issued to WIP, repairs, return from WIP, sold, any kind of shortage. So we have made a account. This is what they're expecting. I think everybody will be able to make it. Wages account, 35,000. Yes. CLC, how much will be going for WIP? They have already given us 30,000 is being charged. So I think each one of you will be able to make the ledger account, right? And then you make the overhead account from store ledger to, the expenses which you've done, which account, everything will be done, right? You'll be able to make the WIP account and you'll be able to get your finished good, right? But technically speaking, once you have got out with the balance, the question says finished goods which you got, on that you add 20% profit and on that basis you sell the good. So actually, as far as cost sheet is concerned, from the costing records, your profit is going to be 20,000. Even if I don't make this cost sheet, right? I know my profit as per cost sheet will be 20,000, but this still institute as a represented fee. Direct material cost, 40,000. How did they get out with it? Look at it. You got a store ledger control account. Yes or no? 80,000 you transferred to the WIP, but 40,000 you return. So that is why in costing, direct material charge is 40, wages 30, prime cost is 70. How much overheads you charge, you got out from the overhead account. Yes or no? 1,20,000. You got out with works cost. Opening WIP will be given to you, is given to you in the question. Closing WIP is given to you in the question. You got out with your cost of finished good. You've added up profit, and this is your cost sheet. Yes or no? I hope everybody clear. Ma'am, can you explain closing WIP overhead working? Jamil, in that question, if you see, they have given you that there was a breakup which was given. Closing WIP, they have given you material is 30,000. Labor, they have given 20,000. Now, for cost sheet purposes, I will not take up the overheads which they are given in the question. I will just go in by the information. The information says that overheads are always absorbed as 100% of direct wages. So in that WIP figure, wages was 20,000. So Jamil, 100% of direct wages will be 20,000. So the value of my WIP will be how much? Material is 30, labor is 20, and overheads absorbed is 20. So total is 70,000. So Jamil, I hope you have understood. Okay, Ria, reconciliation is really interesting. You made it easy. Thank you so much, Ria. It makes me feel happy. Siddharth understood. What is the treatment for factory overhead difference? In the previous question, Rakesh, if you're asking me, factory overheads, I think in finance was 450, and in costing it was 5 lakhs. So basically, you have charged more expense as far as costing is concerned. Now, Rakesh, it's a very simple thing. If you charge a higher expense, the profits will be lower. So if the profits in costing is lower and you want to reach up to finance, what will you do, Rakesh? You have to reach up to finance. Your profits are lower because of this. You'll add it back. So that's what I did. Okay, Rakesh, am I clear? Ma'am, goodwill? Okay, thank you, Jay. Jamil, clear? Okay. Nagraj, thank you so much. Thank you, Nagraj. Thank you. So is everybody clear with this? Now, profit and loss account will be very easy for us. We know the sales figure. Yes or no? Now, we have the actual figures from here. Look at it. We have the closing balance of store ledger control account. Can you see? In the profit and loss account, we are putting in closing stock of raw material. We are putting from the WIP account. It is 20,000. No other information is given to me, right? So I am taking up this figure of WIP only as the balance in the P&L account. Material opening plus purchases minus sale is going to be figures. So opening balance is given in the material, in the, what you can say, store ledger control account. Can you look at it? Right. Opening plus purchases. Yes. So 15 plus 80. This is what you must be thinking. Yes. Okay. This is what you must be thinking. That material, how has this figure of 90,000 come up? Can anybody tell me? Can anybody tell me? Okay. Can anybody tell me from where did this figure of 90,000 come here? Opening WIP, closing WIP figures are clear. Wages, direct or indirect, we have put in directly. Overhead expenses, we have put in directly. From where did this figure of 90,000 come into existence? Anybody can tell me? Oh. How has that figure of 90,000 come here? Or do we have this figure here in the question? Do we have this figure here in the question? Material consumed, Brenda. Okay. So material consumed. Material consumed. That means you went in for the store ledger control account. Yes or no? Yes or no? Yes. So from the store ledger control account, this was the opening balance. This is what you purchased, 95. This much you returned, right? This is your closing balance. How did you find out that, okay, this is the amount of raw material which we have consumed? Simple. 80 you issued to WIP, 10 you issued for repairs, so it was 90,000. Yes or no? Yes. How much came back? All that they have not considered. What is it? Yes. So that's it. We just put in the broad figure here. Opening balance plus purchases minus sales. Yes. So opening balance of this is 15, you purchase 80, 95, you sold 5,000. Finish. That's it. Nothing else. Nothing else. Because you're not bothered. That's only for your internal accounting, that how much material you had, how much you issued to production, how much you issued for overhead, how much came back. That's not relevant for financial accounts. Thank you, Vrinda. We just took up that, okay, how much is consumed. That's how you do it in finance. So you had an opening balance of 15. You purchased, how much? You purchased some 85,000. So you had 95,000. You sold worth 5,000. 90,000. You got out the net loss, and I think now you can reconcile. So 3,000, right? Let's look at the differences. The differences as per P&L account, this is 3,000. Here it is 20,000, right? And they've just put in overheads are over absorbed, and everything they are saying, if you go down to overhead control account, they are saying everything is here. I don't need to do all the separate entries. Everything they're saying overhead control accounts have been over absorbed. See, I have not taken up anything from the sales, from the store ledger, from WIP. The difference is only coming because of overheads. No? I put in the actual figures. So whatever over and under absorption will be there, it will be the reason for difference between cost and financial accounts. Am I clear? WIP opening closing balance is there in statement of P&L account also, cost account also, and P&L account also, right? Material, how much is consumed is there, sales figure is there. So the only difference, wages completely is here. So only difference can only happen because of the overhead, no? Because here I put in overhead expenses just in one shot, 1 lakh. So all that working is required for costing. Here, simple. There's a loss here. I took up how much is over absorbed in from the overhead control account, put it here, and I reached up to the profits as per costing. So I hope I'm clear. Yes. Yes. Okay. Let's look at the next sum. Do we have time? It's already 9:33. Following figures have been extracted from financial accounts. Look at it. Direct material consumption, wages, general overheads, dividend received. What are you supposed to do, guys? Cost accounts for the same period reveal that the direct material consumption was 56. Factory overheads record 20% on prime cost. Admin overheads at the rate of 6 per unit. Selling is at 8 per unit. What can you do, guys? You first prepare your P&L account. P&L account will be simple. You have got the sales figure. You've got the closing stock figure. You have the WIP figures. Just put in those figures. You have the material, wages, and you have the factory overheads. You get out with your gross profit. Whatever are your expenses, general, selling, back veterinary, legal, incomes, dividend, interest received, you put it on the credit side. Yes, you get out with your profit. I think everybody can make a P&L account. Yes. Now, for cost records, you need to be vigilant. They have given material consumption as 56 lakh, so you will put in 56 lakh. Wages, nothing is given, so I take up this figure only 30 lakh. So what is my prime cost? My prime cost is 86 lakhs. They have given that 20% of the prime cost you absorb as overhead. So you should not be bothered what is your actual. 86 lakh or 20% is your factory cost. Closing WIP, how will you calculate? See, this is for students who had a doubt. Look at it. How will you calculate your closing WIP? It is given 2 lakh 40. They have not given me a breakup. If at all they had given me a breakup of material or labor, then what I would have done? Total of material and labor would have been the prime cost, and 20% of it factored I would have absorbed, and I would have got out with my value of WIP. But they have not given me any information. So look at it. Here in cost sheet also, I'm putting a closing WIP as 2 lakh. I don't have the breakup, so I put that. I get out with my cost of production. How many units I produced? You can actually get it from here because you have sales 120, finished good 4,000, no opening stock. That means you have produced 1,24,000 units. So whatever is this cost is the cost of 1,24,000 units. You get out per unit cost, multiply with the finished good, and get out with your value of closing stock. You get out with your figure of closing cost of goods sold. Then they have said admin overhead would be at the rate of 6 and selling would be at the rate of 8. Add up those expenses. Subtract it from the sales figure and you get out with your net profit. And then guys, I hope you can make the reconciliation. Yes or no? So with this, friends, I have told you about the concept of reconciliation. Now, what is this institute talking about? Partial plan and single plan is in cost accountancy. All this would be relevant when we'll be doing our CFI, at least from here, because single plan and partial plan means when at the beginning only, when we are doing accounting, at that time, only if there is any variance. Now, when you're doing standard costing, you'll be able to understand that material control account will be charged to WIP only at the standard cost. So any kind of price variance or quantity variance we record at that particular time, that means the WIP only standard cost is good. Right? This is known as a single plan. And partial plan means we make our material account, wages account, and when we are making a WIP account, that is from WIP when I'm transferring, that time I book up all my variances, right? Whether it is relating to material or labor or overheads, right? So that time we are booking all our expenses. So guys, you'll be studying standard costing, then you'll be able to understand what variances mean. So single plan means that when you record your variances at the very point when you buy the material or you incur expenses or you incur wages, it's known as a single plan. But when you record this at the time when you're transferring to finished good, that is in the WIP account, that's known as a partial plan. So, guys, this is all from my side as far as this topic is concerned. We solved a lot of sums. And I think all of you are very clear with this topic. Thank you so much. Right? Makes me feel happy that everybody is clear. Session is concluded, Mr. G. Thank you.